at Shawbrook Bank headquarters with MD Stephen Johnson. And Stephen, it's no surprise that sort of limited company and incorporation is a trending topic on property tribes at the moment. And I thought it'd be interesting to talk to you about the actual process of getting a mortgage through a limited company. First of all, they've actually got to set up the company. Would you recommend that they work with an accountant to do that?
Yeah, I think you can acquire companies online quite quickly. Pre-registered. I think generally the advice to a landlord would always be to take good advice, proper tax advice, accountancy advice, and to do it properly rather than necessarily cheaply and then come unstuck a little bit later down the line. But you can buy off-the-shelf companies quite easily. In terms of the application process for financing, you have a different pool of lenders. You don't have the same range. It's a more sophisticated underwrite because the lender has to understand the company structure, what may be in the accounts, and from a legal perspective, there are other parts of the Companies Act that you have to comply with, checking articles of association, memorandums, appropriate board minutes approving the financing. So there's more work involved. Having said that, Shawbrook and other lenders have worked hard to streamline that process. We've got a range of initiatives around title insurance that we've adopted for limited companies as well as personal loans.
Mm-hmm. So would you say that when the landlord goes to take out a limited company mortgage, they must be much more efficient with their documentation, make sure they've got the right documents and so on? And what happens if the company hasn't got any trading history? How do you assess that?
Yeah, I mean that's very common, especially for landlords who are starting to grow their portfolio in new SPVs. Mm-hmm. That's well understood by lenders. So that's actually is okay and is acceptable. What tends to be more detailed is where you have landlords that have got long-established companies with multiple properties, with multiple lenders, and potentially even other forms of trading activity in that limited company, and that then becomes a much more complex to understand in terms of the income and the expenditure and the liabilities, rather than an SPV where fundamentally it's an envelope for one property. So actually, a kind of an SPV in many ways is easier than a long-established trading company. Many corporate buy-to-let lenders would not lend into a limited company alongside another lender, or if it was a trading business.
But do you actually look at the individuals involved within the company as well?
Yeah, very much. You need to be, clearly, the lender would do the diligence on the individuals, their own personal credit history, their track record. So yeah, that's a key part of the assessment. So that in many ways is the same as a standard personal buy-to-let. You just have the additional layer of understanding the legal entity, who all the directors are and the shareholders. In many cases it's straightforward, but you have KYC, know your customer requirements as lenders, and therefore if you do start to get JV type structures in a limited company, that can introduce levels of complexity, especially if some of the investors may not be in the UK. And typically lenders execute personal guarantees to support the loan. And again, if you get different shareholdings, very minor shareholdings, then sometimes that becomes a bit tricky with who's providing the guarantees. So again, this just adds to the sort of complexity. But there is an increasing range of lenders in this market, and the market is well served. So it doesn't limit your options. It's just a slightly different process.
It does sound from what you say that it might take longer than if you were taking out a mortgage in your own individual name. Should people allow more time?
Yeah, I think that's fair.
Yeah.
Now the lenders and the specialist lenders in this market, like ourselves, everyone is geared to trying to be as efficient as possible, recognising the urgency and the importance of transacting for the landlord. But clearly, we've just been through, there are further information required, and being prepared and having that information is helpful to start with. Potentially getting the right advice from the right intermediary or dealing with the right lender is important. But you should be have a slightly different expectation. Many cases that the experience will be the same as a personal loan, but as a personal buy-to-let mortgage. But yeah, you should be kind of slightly realistic as well.
And you've got some new products coming out for the limited company market in recent times, haven't you? You've had some new releases.
Yeah, it's been part of our strategy to continually improve the product range as we sort of grow the business, get the opportunities to reinvest that growth back into the sort of product pricing as we get economies of scale and greater efficiencies. So yeah, we introduced a simplified range and a more keenly priced range, and it's been very, very popular.
So just to finish, Stephen, I think we'd both like to reiterate that, incorporation, it's not a case of kind of rushing into it. You must go and speak to a tax advisor and have your own situation looked at, because it's not going to be right for everybody, is it?
No, it's not. It's not a simple equation of will I be better served in a limited company from an income tax perspective or not. You have issues around how you extract profits from companies. So there's taxes involved in that process, and those recently changed in the budget with a change to the dividend tax. Depends on your investment rationale. If you're a landlord who's actually looking to realise property in the short term, it'll be much more tax inefficient in a limited company, because you'll be paying corporation tax on the proceeds. You'll then be paying tax on the distributions of those profits. If your investment strategy is actually wealth preservation for the family, and you have inheritance tax concerns, then limited companies offer you a range of different things that you can do with shares and trust. So it's income tax, it's capital gains, it's inheritance tax, and then you just got to think about the administration and management of a limited company, the costs involved with that,
Good point, yes.
what it might do to your financing options. So there's a raft of considerations. It's just the best advice is to be thoughtful, take good advice from tax experts, and then you weigh up the relative merits depending on what your circumstances and what your strategy is.
I think one thing that's interesting, Stephen, to come out of it is that it's going to be much more transparent as to who's got what, because people will have to file accounts.
Yes. Yeah.
Certainly to HMRC as well.
Yeah. Individuals have to produce their own profits and loss and account for their income and expenditure as well. So, it's different, but in theory, it's the same information just being presented in company accounts as opposed to individual tax returns.
Well, thank you very much for sharing those insights, and thank you very much for having Property Tribes here at your lovely headquarters.
Nice to
Thank
see
you,
you again.
Stephen. Thank you.